What's up, everybody? Welcome back into another gold marathon. We're going to do our usual exercise of doing 20 trades on gold that you already know. The rules are as follow. You know, we're going to take 15 pips stop loss, which should be enough for most of the trades. We're going to take the partial position out at 30 pips and let the 20% run risk-free. If we see that the price clearly goes above 35 pips, which is 1 to 3, then we can put the stop loss at 1 to 3 and then let the 20% run without taking profits in order to catch bigger moves, in order to avoid cutting the wins short. Of course, if at 35, 40 pips we see some reaction, if we see that there's some rejections that we see is failing to break above, then we can decide either take the 45 pips, take profit, and then take a re-entry if we see the price continuing, or improvise and adapt. Of course, if we see re-entry available, we might think about hedging for a second entry, putting the stop loss in profit for the first trade. What I was doing as mistakes in the previous trades, especially in the first gold marathon, I was not looking at the timing. I was not looking at that we were 5-10 minutes before New York Stock Exchange, or the new 4 hour, the one after New York Open, and I was not respecting the time of the sessions. I will explain later. I was not letting the winners run. That's why I put also this rule over here. And there was a case where I was not exiting at break even with entry over here. Price right like 15-20 pips above my entry, but still consolidating, especially if there was one tap and then just consolidating. There is no reason for me to risk the full stop loss in this case, especially if the price already tapped my entry again, or the stop loss but without taking it out. There's no reason to allow it to do it again and get stopped out after a rejection. We put break even, and then if we get stopped out the break even, it's fine. Otherwise, to me, there's no sense to take the full stop loss on it. This one is this rule. I want to try to enter only into pending markets, or I'm trying to use a checklist, especially a mental checklist of the reasons why I should enter over there. If it's trending, if it's a volume time, if I'm seeing the confirmation that I want, if we are at a important PSA or key level. Multiple rules, and I want to take any trade of the setup. So that's why this is to make confidence about my setup. Of course, my execution might be lacking, especially now that we are going to move faster during the simulation. That's why sometimes I might take the trade after seeing the next candle, unless it is like 100 pips move already. Just give me a second. And I'm back. Okay, so these are the rules, and we're going now to choose a a random date between September 2020 and September 2021, and we're going to see on what's going on. 10th of August, so not too long ago. But luckily I don't have much of a memory, so okay, 10th of August is a Friday. Is there possibly NFP? Let's see. Two pips of spread. Mm, I think I choose 2018. I'm dumb. Just give me a second. There you go. 2021. 1 minute and hourly chart. Okay, very good. So 1 hour. And okay, the 1 minute chart over here. So yeah, 2 pips of spread, which is good. And the risk 2%, 15 pips. We will put the stop loss at 60, they take profit at 60 pips. I will going to jump into the pre-London session, South of London session. What I do usually is the first 2 hours here of London, pre-London and London, and then New York session. So let's jump into it. So this one I will remove it. I will put it over here. We just move by single minute then. So what we saw is, if I'm not mistaken, this was NFP move, which brought price with a huge, during Asian session, huge spike up, down to 1680 and back up immediately for like 400 pips, 700 pips. The news, let's go into the ones of USD. Okay, yes, we had very good NFP, better than prior, better than expected. We had a huge drop in unemployment rate, and we were so very, very bearish on gold. Very, very good, optimistic data for the upcoming tapering talks. So today we don't have any news report. Tomorrow we have the inflation data. That is, I would like to see the year over year, but I think we will look at it on the actual economic calendar, PPI the following day, and we have anything else? core retail sales at the end of the week. Okay, so these are the news. So today, no impacting news report, no speakers. So we are before London session, and we are over here. So okay, guys, just give me a second, and I will be back. Okay, I'm back. So what we were starting was the pre-London session. We want to have a look on where prices, what happened the prior week. So we had NFP, which gave a really huge from 1760s, even from this was the actual NFP from 1790, 1789 down below to for like 1000 pip to 1680 with a huge bounce of huge spreads, as you can see, close here, open here, was like 40, 50, 70 pips of spread, and then when the liquidity provider come down, we were in the next few days, and we are now on the Tuesday, the 10th of August. Yes, Tuesday, 10th of August. So here, okay, and we are at pre-London. So we saw a bounce. We saw a bounce from these previous lows here, 1623, and we saw the correction. So what we are trying to see is the bearish trend going to continue due to the very huge move, so very aggressive bearish move, bullish correction. Do we is the bearish trend going to continue and feel this huge wick, or is still too early? So in my understanding of the markets, what I saw is that live markets 1680s is been the huge is the huge price point, the last high time frame price point where price needs to break to then have the dollar really strong. Not to break, it has to be that the dollar is very strong and is coming from tapering interest rate hikes. In my opinion, is not going to happen like this, because yes, this NFP is little 1781. I think I removed it. Yeah, and okay, it's not going to happen like this with the NFP without the confirmation of the Fed confirming the tapering. Okay, so sorry, I was fixing it. And so what I'm expecting here is we're going to see now in the first few hours or in New York or in the upcoming week. Remember that we are not going to take a trade by trade approach. The trade approach is series of trades. So I'm going to take 20 trades, no matter what. Not today, not in this session, of course, in the upcoming week. So what we might see is another bounce and then continuation up, another bounce, much smaller to 1731, and then continuation up. We can also still have some rejection at these previous highs that might give some bearish rejection over here. Of course, safe sells only below the key level. We can have some medium risk sells from key level to the previous lows. But I want to see Now the very next hour, we make a lower wick and then continuation up, or what happens. Let's jump into it and let's see what's going on here. Let's just go. Okay, there you go. So this is the key level I'm talking about, and I want to see if we break below and go back to these previous lows, but we are still in a very bullish trend, or we make possibly a lower wick, possibly even just here, red, and continuation up. Let's see what happens in the first few candles of the hourly. Remember that we're not even in London session, we are in pre-London. So we saw couple minutes making a lower wick on the hourly time frame. Let's see where the price is going. Top. It looks like so far is pushing up. Big correction. So far the bias looks very bullish. We are now at this price sensitivity area. We have a confirmation of price making a lower wick and pushing a little bit bullish. We might start also looking for setups. This one, if you want to see, makes a lower wick and then close very bullish. There's still plenty of price sensitivity areas on the left hand side. We don't have much confirmation of price trending, but this is a candle setup that I usually use. We are working above, not exactly those previous highs. We might even take into consideration to take our first high risk, high reward buys just to start off the series. So this is the first trade, and we're going to see if we can have some nice range to reach the key level. It's very rushed, but I'm going to see. Okay, let me just pull off the trades. PNL here. Yeah, it doesn't look very optimistic. It looks like we got a rejection at those previous highs. We're coming towards London Open. So we might even take into consideration now what I was talking about prior was of, if you remember, if you enter here and you see multiple rejection, as you can see, you already add a pullback to your entry. There's really no reason to take the full loss. So I'm going to take it to put at break even. And if we get stopped out, it's fine. But we're going to take further entries at not even full loss, just below the key level, which is like 5 pips stop loss. And to take due to the fact that London session might bring another pullback and then continuation down. But you know what? I gotta be honest. I want to see, because if now price goes back to my doesn't break my 15 pips stop loss, then I'm going to be pissed off due to the fact that I didn't accept the risk. So that's why it makes sense to leave it here. 11 pips is perfectly fine. And we're going to accept the loss. Not accepting the loss would be a worse mistake than just saving up some money. Okay, as you can see, it would have been still alive, but it makes more sense my thought due um, to the reasoning that I'm saying. So we are now 23 pips. We might take some partials. We are coming close to the London session. We're going to break even. Now this is London Open. Exactly, that's the pullback that we are expecting. That's why, this is why I took partials before the 40 pips, the 40 pips, the 30 pips usual target, because of knowing the timing. So I know that London session brings a pullback, so I'm expecting this bearish move. As you can see now, the new hourly candle made a lower wick for sure, and we're going to take further entries if we see price again moving bullish. Just a little bit of zoom out. We have this PSA which didn't actually hold any strength, and this one was actually a nice solid platform. Let's say that, put it this way. Yeah, into first London Open, and we're going to see if we can take another re-entry. We close the first one, of course, in profit, and we learn a nice lesson of here. This move was really nice in as a psychology point of view, because accepting the risk when I enter the 15 pips loss, accepting the risk has to be there. Okay, accept the full loss. Now, yeah, I took it at 12 pips because I saw here that this is the structure. I don't want it price to go below here. It goes below here, doesn't it goes to 15, it's the same. There's no like a support that bounces from 15 pips and not from 12. In this case, from the market structure. So it was good to avoid taking it break even, because it might have been stopped out and then, as you can see, pushed up. We're going to see the next very next candles. Looks a nice reaction at this previous PSA. Kidding. Very strong bearish candle yet. Okay, this is a sign of possible London session lower wick being made. And let's see the very next candles. If they make a lower wick to the PSA and then turn bullish, looks like not. Okay, weaker bearish. Let's see the very next one. If it flips bullish, is a nice entry. No, it doesn't flip bullish, so it's very good. Keeps going bearish. This one is a very nice rejection, actually. Closing with a nice body, possibly rejecting this previous PSA, this previous demand area, as you can see here. Still not confirmed. This is a first sign of it. We can draw a line everywhere and say, yeah, we see rejected, but I'm not going. If now we see a clearer break and retest of this PSA, we can start considering entering again buys. But the bearish action was still strong, so this is one of the rules that I was telling you. blah 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 at first possible sign of trend. This is what I want to avoid as far as possible. But this, for example, this one, yes, was the first sign of trend, yes. But we were breaking up, we made the lower wick on the hourly candle, and it was the intuition that I didn't want to miss the trade as per the other rule, which is intuition says so, setup is there, setup was there. And let's see what goes on. Then this candle, as you can see, another very strong rejection. After this candle, price can go either way. So that's why this sign, this due to the fact that this setup was not at a specific PSA, was not a good entry point. Okay. We also want to see and spot the fact that now we are breaking and closing below this PSA. So I want to watch closely this candle and if to see if there is some bullish action or we see the candle setup, but on the bearish side to possibly take advantage of the 30 pips range. Very nice and rejected candle. Just put me on mute 1 second. Okay, and I want to think about it. Yes, this would be the same mistake here. Yes, it might be a nice entry. But price can still strongly react here at 13 pips. So it's way better for me to wait below to wait for further confirmation. I will regret it possibly, but it's fine. And I will not regret it. So it's good choice. Happy doing it. So let's see if we have a break and retest here. Okay. We were weak and then flipping bullish. So where are we? On the hourly time frame, we made a huge lower wick. We are 15 minutes till the new hourly open. Safe buys, honestly, will only be above the key level. This will be a high risk, high reward buys, exactly like this. But we grab the liquidity, so we might expect price to at least revisit those previous highs on the left hand side. So this candle, how it closed. Lower week. I would not like to enter now with the 2 pips spread, enter already 8 pips above the PSA. So we'll possibly wait for a retest or just with the confirmation take the safer buys. Very nice and good decision. Oof, that was nice. That was very, very nice. Okay, this one is much, much better. We are still ranging. We gotta be honest. This is the first hourly candle, but this is not a. This is Asian close actually. So we might be very careful of pullbacks. So we're not entering here. Exactly. Exactly. Lower weak being created. Reaction at the same demand area, as you can see here. So now if we have a break and retest of the level, I will take an entry. Otherwise, I will just go to New York. Open. Okay, so we go on the bearish side. and we're going to just wait for New York since we are already way above beyond our um, time session. Let's see, just curiosity if it breaks below the key level. Break, no retest, 25 pips. And inside, this one was a nice entry, but was very, very close to the key level. This one is a nice entry. This one is a nice entry. This is a very bearish trend. We have the confirmation. We're going to take the sell. 15 pips stop loss. Let's see, at least 30 pips is around here. Or we have the at least 25 pips for the previous lows if we see that it creates a double bottom. Actually, no, looks like price is rejecting it. Even here, it was around 10 pips. This is a nice confirmation candle on my side. So in this case, I see multiple rejections. This for me is the same as the first trade we took. So there's no point taking the full stop loss again. Here at 10 pips. We are 10 pips up. We might even take some partials and let the rest run to the TP or to the stop loss or below, because I am seeing increasing bullish action. Okay, now we are 17 pips. Here, I don't want to get any further risk. I don't want to take any further risk. So I'm going to break even. We're already 50% in profits. I will just let it run, but we are very close. If I see another rejection here, I will take the full position. I'll take another 50% position at these previous lows. I see very strong bullish. Let's see, let's see. 50%. We are here. We are at the PSA. So for me, it's no point risking it because it can go either way. As you can see, we got stopped out and we got a nice win. It's not a full win, but I think I'm trying a different approach at the setups of more trade management, even taking more high risk entries. Now we are going to jump into New York, because as you can see, we took 2 wins, but we are only up to 4%, so which is not ideal. Usually, what we want is to have a full win, cover the many losses. So full win should be at least 3-1, but we are not having those type of actions. So we are being, in my opinion, we are being smart at avoiding taking unnecessary losses. This would have been like 30 pips, yes, but after what? After chugging away. So now we are at New York Open. We want to see where, so we are exactly breaking above, we bounce off here, and we are on our main bias, which is bullish after the correction that we were expecting. Some bounce, we have all this range to fill. I want to see if now at this key level we have a lower wick being created, tapping the key level, and we have the full range to cover at least to the previous. We have nice range to the previous highs over here. Nice range, and we have the first price sensitivity area, which is around 20 pips above us. But after grabbing liquidity, we might expect some nicer action. Let's see. First few candles, nice, really nice. Made already a lower wick at the key level, but we are now way too far above the key level itself. This PSA is not really respected. It's not really matching anything. So this one is for this. These are the previous lows and previous highs. Yes, you can take it into consideration. As you can see, this is the setup, but this is too far away from the key level to take an entry. 15 pips will be around here due to the 2 pips stop loss. Would not be a valid entry because price can still have make a lower wick here and still be very bullish. If we break above and break out already, it's fine. We just have to acknowledge we just get the opportunities at other PSAs. Okay, this is a much nicer bounce of the key level. We might take a higher risk, higher reward entry, expecting price to flip. But of course, I'm going to wait my setup, not just this candle because I saw it going bullish. So I'm going to wait my setup for entering. Okay, this is a much better candle. Of course, we are very, very far away, so I'm going to wait for confirmation of breaking above here, this previous high. Unless you entered here, lower wick, not even, you see, not even the time to enter. Makes a lower wick at the key level, and then just melts up. This would be a nice 15 pips entry because you have a lot of range, you are expecting a bounce. This is one of the high risk high reward entry. I will take it over here with a 15 pips stop loss. We are below the previous PSA. It follows the analysis, and I'm doing here because of the, I see that how fast here on the replay the simulation goes exactly like that. So we're going to take the third buy. Nice rejection. Okay, not the price action we want to see, but we have a safe stop loss below the previous low, below the key level, so it has room to breathe, and then continuation up. Otherwise, we take our loss, and it's perfectly fine. Exactly, we take our loss, and we might even start to think about the continuation below with this candle. So third is a loss. So we have win, win, loss. So what is this candle telling us? This is the very we are in a range, so it will be sort of difficult to enter here. We got to 16 pips, and so the reaction we can expect with this liquidity grab from New York opening to bounce back down to the next key level. So now this is where the uncertainty comes for me. Is this a doable trade, or am I just reaching bias? And we are in a ranging trade. So, okay, so if this is a nice confirmation, we will have a break and retest of this PSA of those previous lows, and we have plenty of range. So this will be a break of my rule of entering into and in ranging in markets. So it's perfectly fine to miss it. If it goes above, then it will be a nice confirmation of my idea of not entering. But as you can see, it broke below 26 pips. The setup was there, was just that we wanted to be cautious about the that we are back into a range. This is a much stronger liquidity grab. Yes, it would have been 30 pips of profit. But look at the rejection candle, which is nice liquidity grabbing for the upside move, possibly. But as you can see, we are still in the range. Now we are breaking below. Let's see the very next candle. We have a full range to the key level. We have in continuation down. We reacted exactly at this previous highs and rejected it. And let's see the very next candle. Okay, it's flipping bearish. It's closing. Let's see where it closes. Okay, close very far below. So it flips. 15 pips will be safe. And we take the sell to take advantage of this 30 pips range. Okay, very nice, and losing trade. It's fine. Fourth, it's a loss, but we followed our analysis. Our analysis was here. We got the confirmation of trend, bearish trend. Yes, this was in insight would have been a much nicer entry due to the fact that we were rejecting the key level, but since we were in a buy bias, was just a shift of bias, hoping that price will go down and not just maybe rejecting over here to go back up. And as you can see, we reacted exactly at those previous lows on the left hand side on the hourly time frame, which I wasn't really aware of. As you can see, which was probably my mistake. Is exactly the same reason now we might expect. We are 10 minutes to the 4-hourly candle closing. This could be a setup, but we are ready. We are only 10 pips above the PPL, and this might be a nice equity gap, but in 10 minutes we have the new hourly candle closing. So this also 2 wins, 2 losses shows you that my wins were not good enough. Were not the 1 to 3, not even 1 to 2 risk reward, because the full loss is a 2% loss. The wins were 2% win, so it was a 1 to 1, 1 to 1. Let's see now this candle. I'm actually not entering because of the timing. Let's see the new hourly candle, what it does. Okay, so this is the new hourly candle opening up, pushing very bullish with a little lower wick. This is a much nicer candle, but it's way too high. So I want to see if we break above the key level again with all this liquidity, then it's okay. Looks like we are still in the range. Okay, in 5 minutes we have New York Stock Exchange open. Let's see what is our bias for New York Stock Exchange opening. We have a huge top wick. We can see a little top wick on New York Stock Exchange opening and continuation down to at least grab some liquidity to the key level. But we're getting closer and closer to the key level. So let's see in the next very few minutes what price does. Okay, so this is New York Stock Exchange opening, and we are opening very close to the key level. So what we might do is either very strongly react to this PSA, we make a lower wick, or even not unnecessary, and then actually it's closing at a new low. So I would like a lower wick and then start to see price. If it makes a lower wick, lower wick, then we see price gapping liquidity, breaking and retesting. We can have some safer buys here after gapping liquidity and showing strength to break the previous lower highs here. So let's see the very next candles. As you can see, did started a liquidity grab and then moved up. And this is the high risk, high reward entry with the confirmation that I just gave you. It is exactly at this PSA. So when it has a nice body, I would like to enter. 15 pips will be well almost below here. So I'm going to take the higher risk reward buys over here for our fifth trade of the day. Is playing the momentum, is playing the fact that I want price to grab liquidity from these previous lows, from this huge sensitivity area, to at least go and revisit the next level and continuation bullish. It's a very high risk reward, but I'm going to take it. As you can see, very strong rejection, where only 10 pips, 15 pips, so it's not a take profit or anything, and get stopped out. Very huge bearish action that was happening here. So let's short it out. It's a minus, so it's fifth trade is a loss. We are minus 2%, of course. And let's see. Very strong action. Very bearish action here. I like this candle really much. Top wick, and then closes bearish. 15 pips will be above the key level. Yes. I'm going to take the sell, 6 sell, and possibly the last trade of the day. $20 pips. We might shorten the stop loss to 10 pips. We might close partial since it's 2 to 1 and let the rest run risk free. This, yes, was possibly the new hourly open, but I'm not expecting this is not a very strong hourly close, London close, or anything. So it's a very next. We are still London for 2 hours, so it's that's why I was not concerned. I looked at the time. We entered 2 minutes before 2 minutes and 2 seconds before the London close, the hourly close, but it's fine. So yes, break even. If we take partials, we might even have a retest here. We might see 30 pips move down. Very, very undecisive. 40 pips, which is very good. So we had 50%. We are really nice and with 80% at 20 pips, which is not ideal. Let's see if we get to the take profit. Of course, I'm not going to actually take risk 20 pips of take profit. Just leave it there, 25. It goes below. We are 50 pips. I just trade the stop loss. Don't want to take any risk. And we get stopped out with a win. And price retrace all the way back. So as you can see, now we took 6 trades. We are up 1.15. This is not ideal. This is not the ideal setup. It's a sort of different way of so win, win, loss, 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 win plus 1.17. It's not very good because in 6 trades with 50% win, if the wins were at least 2 to 1, it would have been like 4, 8, 12% minus 6. It should have been at least 6% up due to the fact that we had 50% win rate if we had the 2 to 1 fix. So, but remember that the first 2 wins that we got were very, very trade managed, as you can see, as you know. Yes, here 20 pips, 30 pips, we could, if we took the full take profit at 30 pips. So let me just save the simulation. As good marathon 3. Okay, so simulation is saved. If we go back here, okay, so we enter full, we have the full position, and we want to take the TP 3 to 1, which is here. 45 pips. And we say, okay, we either take the stop loss or we go to take profit. Okay, as you can see, it's still what percentage? Because we were minus 2%. No. Yeah, we were minus 2%, as you can see, and we get we get to plus 4%, which is a 6%, because it's a 3-to-1, so it's mathematical. So if we, of course, were to take only 3-to-1, it was a really nice trade to close here, but of course, you never know. It's not healthy to just not take partials at 20, 30 pips. Greediness is very, very bad because there's nothing that is impeding price to just retrace here or even here to those previous highs, then continuation down or keep consolidating. So yes, it was not perfect. We managed the trades here. So let's see in the very next sessions. Here, the very next session, what is happening. This candle setup, yes, you might even consider that I took it when we were already here, but this is the candle setup that I'm looking at, and I can also show you. Let me show you. Here. Okay. As you can see here, this candle, as you can see, price is reacting, is staying below the PSA. This is live. This is October. This is the same candle setup, as you can see, that I'm talking about here. So that's why I took it, because it's the same candle setup. That's why. And so yes, this is it. So as you can see, we closed our first session plus 1.1%. It is not the true, because it's not the because we took I think we took 80% here. And stop loss here. Yes, almost exactly. But anyway, the next time we're going to load the simulation, which is accurate. We got 50% win rate. If we want to keep using a 1 to 2 risk reward, it has to be 1 to 1, 1 to 2 risk reward, has to be a higher win rate than usual, at least 50% or even slightly more. But this is it, guys, for today. See you guys next time.